I'm not sure if you brought the cyclical trade with you, but I'm curious as to whether you think there's some legs to it, because we've seen kind of the Russell, the small cap, S&P small caps outperform on a daily basis and a weekly basis pretty frequently over the last few weeks, and I'm curious as to whether you think there's more behind it.
This is the soft landing. It's okay. Finally, we're getting rid of just the Magnificent Seven, and we need that breadth. You need the small cap to come up and actually do a little bit better. GDP isn't negative, so the market's going to be okay. I don't know if the Fed is going to ease very quickly in 24. We have to readjust to that. November, people got ahead of themselves, but I think that we're going to see rates flatten out. We're at the top. Going to slide down a little bit, and that's good earnings for small cap.
Well, I want to follow up on that, and with the big asterisk that you are kind of the longest of long-term investors. But when you look at the price moves and the correlation that appears to be out there for Fed cuts, multiple Fed cuts next year here, do you think the market is getting maybe a little bit too ahead of itself?
Well, Romaine, I'm big macro, big macro. Yeah. So yes, the market is ahead of itself. Yeah. I think that realistically, the Fed may start to gradually ease, but not till they get a lot of inflation reports that are benign. They need inflation to be at the threes. They're going to watch employment. We all know that. They're data driven. And so they'll worry about employment, but they're not going to rush into this, and they don't need to back off. They achieved the soft landing, believe it or not. So now they can just glide down the runway, low GDP, but you know, a nice earnings environment. The market's going to do okay. Look where we are fiscal year to date or calendar year to date for the rest of the world. In U.S. and non-U.S. stocks, we're doing okay.